Hello guys, in this presentation, my team and I will be presenting our foreign exchange market, which consists of AUD USD and AUD GBP later on the presentation. Here, we're first going to compare the few of the most popular or traded currencies in the world, which is USA and Australian dollars. The exchange rate is 0.7971 USD in conversion to 1 Australian dollar as of the 22nd of September 2017. These are the three determinants which will be evaluated to conclude which currency will appreciate or depreciate against another currency, which is interest rates, economic growth, and inflation rates. Interest rates. As of 2017, the rate of Australia is currently sitting at 1.5% according to the Reserve Bank of Australia. While the Federal Reserve has set US interest rates at 1.25. Interest rates affect consumer spending. The higher the rate, the higher the loans will cost them, and less will they be able to buy on credit. Based on the relative interest rate theory, an increase in interest rates would have the following effects. It would encourage capital flow, which will increase demand for currency. It discourages capital outflow, which decreases for the currency. Due to the current situations of both central banks, it is likely that the investors will certainly decide to invest their money on assets in Australian banks as higher returns are guaranteed compared to leaving it in the United States banks. Therefore, would the net effect would be an appreciation of the USD since it has a higher interest rate than USD by 0.25. Inflation rates. The inflation rate of Australia as of June 2017 recorded by the Reserve Bank of Australia is currently sitting at 1.9, while increasing from 1.5 in December 2016 over the 6-month period of time, while the US also has a 1.9 inflation rate according to the federal system of the United States. Inflation is a condition in the economy when the money is starting to lose value. That means that with the same amount of money, one can buy less goods now. The price start increasing and the commodities become dearer. With both inflation rates being the same, however, it is forecasted that there is a rise in Australian inflation rate and a fall in the US. Therefore, countries with low of inflation rate will expect to see an appreciation of their currency. So in this case, the US will expect to see an appreciation. Here we have economic growth. Australia's growth rate is currently 1.8 during the year and currently accelerating at 0.8% in the second quarter of 2017, according to the business reports business reporters including Michael Janda and Stephen Letts from ABC News. The United States growth rate is expanding from 1.2 in the first quarter to an annualized 3% in the second quarter of 2017, according to the Bureau of Economic Analysis. An effect of economic growth is an increase for demand for imports. This will increase the supply of the currency and the shift of the supply curve to the right. Another effect could be the increase of the level of overseas borrowing to finance increased investments. This increased the demand for the currency and the shift the demand curve to the right. As the Liberal Party aims to implement import trades with other countries in order to generate new businesses opportunities, this is a result will cause an Australian increase in the demand for Australian dollars. Alternatively, areas of domestic demand as well as imports have been expanding at a pace at or above the trend. Government Liberal parties. As of around 300,000 new jobs have been created last year, the strongest growth in the employment since 2007 in Australia. The Australian economy is growing at a 3% a year, faster than any of the G7 economies, which is a group consisting of Canada, France, Germany, Italy, Japan, United Kingdom, and the United States. After thorough research, it is evident that the USD will appreciate against the USD in the next 3 to 6 months.
The Great British Pound is the main currency of the United Kingdom and is the fourth most traded currency in the world and is currently valued at £1.7 to the Australian dollar. The UK is the ninth largest export economy in the world, where 44% of exports went to other countries in the EU. In this analysis, we will discuss the relative interest rate, commodity prices, and the relative inflation rate to make our prediction. Real interest rate is an interest rate that has been adjusted to remove the effects of inflation to reflect the real cost of funds to the borrower and the real yield to the lender or to an investor. Out of Australia and the United Kingdom, Australia has the higher real interest rate, meaning that Australia will yield a greater return, increasing the demand for the Australian dollar. As a result of this, the Australian dollar will increase in value as opposed to the Great British Pound. If Australian exports become more expensive because of inflation, overseas importers of Australian goods will return to other countries and the value of our exports will fall along with the demand for it and the value of the Australian dollar. An increase in commodity prices will increase the value of Australian exports, resulting in an appreciation to the Australian dollar due to high demand of the Australian dollar. However, despite the following appreciation, trading partners cannot cater to other suppliers because commodity prices are constant worldwide. Australia's exports consist heavily of commodities including minerals, fuels, gold, and foods, as shown by the graph above by the Department of Foreign Affairs and Trade. Whereas the United Kingdom mainly exports machinery and vehicles. The United Kingdom exported $425 billion worth of goods around the globe in 2016, increasing by 13.7% since 2009 when the Great Recession kicked in, but down by 12.3% from 2015 to 2016. The United States heavily consists of the automotive industry, such as cars, planes, and oil. The United States-Australia Free Trade Agreement has served as the basis of our trade relationship since the agreement began in 2005. Under the Free Trade Agreement, all tariffs have been eliminated for imported products from the United States into Australia. The Free Trade Agreement has operated smoothly with Australia, resulting with trade and investments growing in both directions. Since the Free Trade Agreement went into force, the U.S. goods exports to Australia have grown by 59%, and U.S. services exports have more than tripled, leading to Australia being the United States' 24th biggest trading partner.
Relative inflation rates of AUD/GBP. If a country has higher inflation rate than its trade partners, this will result in the country experiencing a less demand for exports, as demonstrated by D1 translating to D2, and a larger demand for imports, as demonstrated by S1 translating to S2. Furthermore, the demand for the country's national currency would decrease and its supply would increase, resulting in a change in equilibrium from ER1 to ER2. This would be the opposite if a country had a lower inflation rate than its trade partners, as it would experience an increased demand for exports and a decreased demand for imports. Relative inflation rates of AUD/GBP continued. The United Kingdom's inflation rate has fluctuated since the beginning of 2017, ranging from 1.8% CPI in January to 2.9% CPI in May and August. This fluctuation of inflation rate provides an uncertainty as to the future of the UK's inflation rate. However, in comparison to recent years, it has heavily increased by 2.6% since 2015. Relative inflation rates of AUD and GBP continued. As the United Kingdom's inflation rate is relatively higher than Australia's, with the UK's being 2.9 and Australia's being 1.9, there will be an increasing demand for Australian exports and AUD in the UK. Both the United Kingdom's and Australia's inflation rate are fluctuating at a similar rate, indicating that the relationship between AUD and GBP will continue into the future if each nation follows along a similar economic pathway. AUD and GBP conclusion. In conclusion, after Thorough research of both the AUD and GBP will experience similar activity in the near future, with interest rates remaining unchanged and inflation rates and commodities increasing within the foreseeable future for both currencies. Therefore, due to both the currencies experiencing similar changes, it can be assumed neither currency will appreciate or depreciate against each other in the near future. And these are our references.